Good morning, good morning. We're placing a trade here on NQ. I had a very busy morning and I'm actually surprised how I have time to create a video. Videos will still be uploaded, of course. Even when I don't do these kinds of videos where I talk, there will be other things like shorts, YouTube shorts. There. I'm gonna focus mainly on YouTube shorts. But last night, like yesterday, I took a trade and I posted the executions on Twitter. Beautiful trade. It was stunning. Now, that was using this model, but it's because I got lucky with something else, right? Um, that's another model that I've just came up with. I won't share that. I just came up with it yesterday, but it works. Like you saw the executions yesterday in the final hour. It was stunning. So I'm maxed out on risk here. I'm gonna reduce it by a bit at 44. Bingo. I'm gonna set one buy limit here. So this guy posted the charts of an ICT versus CRT trader, and he labeled every bearish order block and bullish order block. He labeled every fair value gap, everything. Come on now, you can't compare yourself to an ICT student. If you trade CRT, if you trade CRT, ICT wrecks you. But yeah, this retard, this idiot, right? No offense to anyone, but this retard, this absolute idiot. He posted a tweet this morning at like well, I woke up at like 6 a.m. my time, my local time. So midnight New York local time. And he said Psychology equals bullshit. Trust your system and apply it. That's it. No. If this turns out to be a losing trade, if this trade that I'm currently in right now turns out to be a losing trade, I need to have the proper psychology in mind to step away from the charts and trust my process and do it tomorrow. He's completely wrong. Like he says, trust your system and apply it. That's it. No. You're wrong, you're wrong, you're wrong. Wrong, 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 wrong. Horrible, horrible, horrible. Oh my days. No matter what system you're using, ICT, CRT, NFP, CPI, PPI, I don't care what you're using. Your psychology has to be on point. And now, what do I mean? What do we mean by psychology? When we say psychology, I in particular say, what would you do if you have a losing trade? Would you go on tilt? Would you get destroyed? For example, this is part of psychology. My maximum risk is $44. I'm in 2 contracts. I'm at my maximum risk. Is your psychology strong enough where you'll say, ah, screw risk, I'll add more? Or is it good enough? Is your psychology good enough to say, no, I'm at my maximum, I don't care how much drawdown I'll endure? Or would you say, no, let me correct my position and add it higher, add more risk? Absolutely not. That's part of the psychology part, you know? If you have a losing trade, would you get angry about it? Would you revenge trade? Would you go back in? What would you do? That's what I mean by psychology. So, people who say you don't need psychology because your strategy is good, no strategy is good. ICTs, IMP24, Enigma, NFP, CPI, none of it is good. None of it, because you have room for human error, right? The silver bullet was phenomenal. I got the understanding very just recently. I've been studying it for 3 years. I couldn't get a grasp of it. You need psychology there, because if you take a losing trade and then you try and correct it, and then you try again and again and again, in one session you're blown. You're done. That's it. After 3 losing trades in one session, you have lost the plot of trading. You're trying to make money when you're supposed to try and preserve it. Me adding more than $44 of risk is me not preserving money. That's why I will not be adding any more. Do you feel like I think this is the top of this retracement? Do you think I don't feel like adding one more? I feel like pushing the button, sell, boom, and I'm in another contract. My position gets corrected up here. A better fill, right? No. You're increasing your risk. You have to reduce it. You have to minimize it. These markets, no one, okay? That's the one thing I got from the Wolf of Wall Street. No one, no one. I don't care if you're Jimmy Buffett, Warren Buffett, Amy Buffett, ICT, Michael Joe Huddleston, CRT. I don't care who you are. No one knows whether the markets will go up, down, left, right, or start spinning in circles. Right? No one knows. No one. All you can do is risk properly. Now, I'll talk to you in probability forms, right? So if you risk properly and you risk accordingly, you have a 50% chance of winning. Now, if you trade CRT, you have a 50% chance of winning. If you trade support and resistance, you have a 50% chance of winning because those strategies add no value to your probabilities. But if you trade ICT, your chances of probability are going higher, up to 70 and 80% profitability, right? Now, why ICT? Because there's logic behind it. Logic, right? Now, Of course, you'd say you're biased because you trade ICT. I'll mention something I hate: quarters theory. Quarters theory. I've never studied it, I don't know it. I'm pretty sure they split the year in quarters, and depending on the quarter, they buy or sell. That actually works a very good lump of the time, right? I've seen it myself. Like, there's a huge tendency, for example, the first 3 months of the year is a consolidation, the next 3 months is an expansion, the 3 months after that is the distribution, and then the last 3 months is another consolidation, getting ready for expansion next year. I understand that. That adds your probabilities as well. That adds a good 20%. If you trade quarterly theory, you have a good 70% chance of being profitable. But ICT, it just overlaps quarterly theory, quarters theory. Like, ICT has nothing to do with quarters theory. Actually, it's far better than quarters theory. But any dipshit that tells you psychology is not important, it is absolutely important. Now, I'll give you another example of psychology. Let's say this is the top and it starts distributing lower. Would I be angry because I didn't sell one contract at the very top and guessed it? No, no, I wouldn't, because my mind is fixed on preserving my capital. I don't afford more than $44 of risk. Therefore, I'm happy that I didn't sell one up here. Although I would have been in such a better position right now. I'd probably be in profit. I'm over risking. If I entered short up here, I'd have to roll my stop loss lower, which reduces the probabilities of this being a winning trade. So let everything be. I didn't catch the top. It's fine. I actually sold bottom, which is bad, which is worst. And still, I'm happy with not selling the top. Why? Risk management. People say trading is easy because you just need to buy and sell. It's not. It's genuinely not. It's not just buying and selling. I wish I knew that when I got into the industry. I wish I knew every aspect behind trading: the risk management, the psychology. I would have never opened any live accounts. Never. Never, ever, ever. The latest live account that I've opened was um, a $1,000 account, right? And me being a cowboy, never trading futures before, I went ahead and traded Nasdaq, and I would enter with two, three contracts, and that brings me to $300 of risk in a trade, in a single trade. $300 of risk with an equity of $1,000. Do you think I was prepared psychologically? Fuck no, I wasn't. Of course I wasn't. I regret opening that account for one good reason: because I was not prepared psychologically. and that ruins your mental. It ruins your mental. It ruins it. It ruins it. I should have been trading ES with one micro contract, one single $10 win. That's it. That's all I should have been doing. Any more risk from that small $10 win? Was just to ruin my mental. And you could tell, you could like, so in the very beginning when I had the whole 1K in my account, I was scared every single trade because I'd see that $200 stop loss with a 1K account. But then when I reduced the account to like 200, I was like, okay, I might blow it. Let me trade ES. Jesus Christ, what a difference! I saw a $5 stop loss with a $20 take profit. I was like, this is way better. Mentally. Like, this will not break me. And I said, the next time I open a live account, well, I'm just gonna start trading ES. ES is way cleaner, way smoother for a beginner, for a person that just opened their live account. Because I don't care if you spent 30 years on demos and fundeds. As soon as you open your live account and you make that first deposit, and you trade, basically, your mental's gone. Any rational thinking is gone. You're not gonna think normally. You will not think normally. You'd say, I need to double this account by tonight. And then you go and you blow it by that night. Any sane logic flies through the roof. It's gone. Same with this model. Same exact thing with this model. This model, I over leveraged. In the first, I had this. We started this account with 3.7K. We bumped it up to 4.4 because I got lucky and over leveraged. But then I had one trade that was way too over leveraged, and I lost half of the account. Everything's on my YouTube. You could go check. I lost half the account over leveraging. Once I lost half the account, I dropped the risk and I started using risk management. From 2.2, it went down to 1.9, back up to 2.2. Why do you think we're still at 2.2? One, because I got lucky with this model, right? It's a very bad model. It's disgusting. I think I'll blow my account with this. Blow my account. I think I'll blow this demo account with this model. And I guess it's just something stupid I wrote when I was younger. But the point is, right? Even with this model, it's a 50-50% win rate. It's a 50-50 chance. Many times you look at my PNL on YouTube, it's from 2.2, goes to 2.5, back down to 2.2. Like, it goes up, back down. Up, back down. Like, bro, if your model does that to you, your model's probably not that good. But there's so many idiots, just absolute idiots online that try and teach when they don't have Like they don't. I blanked out. Yeah, but there's many idiots. Yeah, I was talking about idiots. There's many idiots that teach and say stupid things like, bro, what? Like even the risk amount. People say risk between 1 to 3% of your equity. Although that's good risk management, yes, because it's hard to blow your account with 2% risk unless you're taking losing trade after losing trade after losing trade on a daily basis, right? I am no longer comfortable. I used to be comfortable with 2% risk maximum. But because I blew my account, I'm no longer interested in risking 2%. I would like to risk a quarter of a percent. I know you can't make any money with that. Well, that's a lie. You can make loads of money. You just need to have a lot of capital. But it's gonna take time, and I'm willing to let the time play out. I've made my mistake of trying to rush the process. I got bit in the ass for it, and lesson learned. Now, I'm not trying to say that I'm good or anything, because again, I'm still 17. I should be the least person you should listen to because I'm still so young and I still have a lot to learn from trading. But looking at everyone else and what they're saying, my god, I sound like a genius next to them. Like, bro, what do you mean psychology is not important? It is absolutely important. It's your make or break in trading. And also, do you have good enough psychology that when you have a string of 8 losing trades with your model, you don't strategy hop and you try another model? Because that's what I did. When I opened my live account, I've been trying different models. I went from the 2022, I used the Silver Bullet, I use market maker models, I use everything. Everything. Like, you're not supposed to do that. You're supposed to pick one, win or lose, eat it, and have fun. But because I had bad psychology when it came to trading, I didn't know how to stop myself. I did not know. So, as soon, moral of the story basically, because I'm gonna keep yapping about psychology and shit. Moral of the story is whenever you hear someone say psychology is not important, block them. Block them. Don't even give them the time of day. Just block them. Yeah, there's this other guy, probably an Indian guy behind this channel because it's an Indian name. But he's an idiot. He's an absolute idiot. Like he posts trading strategy. Before you trade, what's the trend? Bullish, sideways, bearish. Is price at supports? Wait for the breakout. Is price at resistance? Yes, buy. No, don't trade. Yes, sell. No, don't trade. Like, what? And then all his trend harmonic patterns: crab pattern, butterfly pattern, Gartley, bat, cipher. They all look the same to me. How in the chart, when you're actually going to take a trade, how in the chart are you going to know what type of pattern it is? So, plus he doesn't have any executions, nothing. It's just teaching what's already known or posting what's already known. Like, it's detrimental to new students in trading. It's detrimental. So this price action is explainable because we have CPI coming out at 8:30. So by 8 a.m. I'd like to get my trade done and dusted with. Either stop out or take profit. Because there's no way I'm gonna hold through CPI. Like, okay, here's another stupid post. Same guy. How to overcome your fear in trading. Fear of the unknown. Expand your knowledge. I had no idea. Zero idea. Plus, that's incorrect. Of course, like, if you need to fear, if you're fearing the unknown, trading's not for you. You can't solve that. You have to accept the unknown. I don't know if I'm gonna win or lose this trade. You have to accept it. Fear of being wrong. There is no correlation being right and profitable. That's true. That's true. Finally, something good. Fear of missing out. Place stop orders. No! Back testing. You need to know that your model plays out more times than not and is there every twice a week. If that's the type of trade you want, go for it. I want to trade every day. Although I might miss it, but I want to trade every day. Me, personally. So I have models that trade every day. Now there are days where I don't even want to trade and I let those models play away. But I know it's gonna be there tomorrow. I know it's gonna be there the next hour. I know it's gonna be there the next session. So if I want to take it, I will. I know it's there. But I don't force myself to trade every single day. Fear of losses. Trade with money you can afford to lose. No. Risk management. Manage risk. If you're afraid to lose, go out and lose. Small paper cuts. A $5 loss on ES. A $10 loss on ES. on $1,000 account, 1.5K. That's good. That's good. That's good risk management. So what does this look like to you? This looks like a bull flag. Let's see if bull flag is gonna win. I doubt. Although these highs are suspect, I think it runs up and reverses. Or just falls out of the bed and keeps going lower now. But, or stays in a consolidation. It doesn't matter. But yeah, now I'm confident that my trade's gonna play out. Because retail is behind it, buying it. Yeah, this is something else I can't understand, bro. Like, I opened some guy's um, bio page, whatever, and in his lab, like in his bio, he has QT, which is quarterly theory. He has IPTA, which is ICT, and he has CRT, which is the retard who created CRT. Bro, you have four different mentors in one single strategy. How do you manage to trade? There's no way you look at the chart and say quarterly theory aligned with CRT and IPTA. Boom, I've cracked the code. How, bro? It does not make any sense, man. It sickens me. Knowing these people exist on Twitter, bro. It's just, ugh. Like, oh my days. Why are you even posting? Seems like bull flag worked. Or did it? So this is my last line of defense for lower prices. If we just continue to push higher, then the idea is wrong. Probably. And also, one more thing I wanted to mention today. I started off as as a reversal type of trader, right? I always liked catching the tops and catching the bottoms of swing points or higher time frame retracements. So I always liked trades like this. This is an hourly chart. I always like trades like this, catching the high and taking it down to the low. I could do that, but I also understand that with that strategy, knowing me how impatient I am, I'm probably gonna lose a lot more because I'm impatient. So what's the best thing to do? Best thing, identify the continuation, I mean the reversal, and trade the continuation. And there's a whole model about it. Every once in a while I still catch a reversal, which is very nice to have, but most of the time I catch continuations because either the market's not in the right condition for me to catch reversals, like for example today, CPI. I am not interested in catching a reversal. I'm more likely to get it wrong than right because it's CPI. So I know what time to trade and I know what I should be doing. Seems like it's gonna take a while. For me, this is the worst part, bro. Like, waiting until a trade plays out is so annoying, man. So I'm gonna mute my mic for 10 minutes and I'll be back in 10 minutes. Take notes and watch the trade play out and see what you want to see. Oh, haven't I got stopped out yet? Oof. The sun's out. Oops. Bro, I have no idea how people spend a whole day in a whole office looking at a whole laptop with no sun in their face. Oh my days, this is nice. At least here on my laptop, I have the sun in my eyes. So now, after waiting for a whole hour for a trade to play out, now I think it's time for us to start shooting lower. I think. Uh, Bro, if you haven't gotten any sun today, go get you some sun, man. I'm gonna sleep like a baby tonight. Almost stopped out. Come on. A bit more. Oh no. We're just going up, then back down. Up, then back down. Like, pick a side and shoot from there. A bit more, and come on. Stop. Filled. So that was the trade for today. I hope you enjoyed. Hope you found it entertaining. Definitely not insightful, but entertaining. Good luck and good trading.